Okay. All right. So we are live now. I everything should be working good now. All right. So we are here. We are live now. Okay. Cool. Cool. Before by mistake I put it on public. We don't want to put stuff like this public. This is kind of like you're going to make insane predictions with this information, so just putting it on public isn't so good. I also had to spend quite a lot of money to learn all of this, so yeah. um, I would always like to give my stuff for free actually, but it isn't really good when you think about it. It's really not. Anyway, so, because people appreciate stuff more when they have to exchange value for it. That's simply how it goes. Yeah, so, and it's not like a lot, $38. And this coming month, January, the premium price will actually be $45 standard price, but not for people who paid this month and past months. This month has really been a rough month, and quite honestly, I do not I it's not been profitable so far. So that's one of the reasons why I extended the 15-day period. Why it's free? It's because it's not profitable so far, and the markets have been really, really crappy. So I really cannot. I don't want to be charging people for something that I know, you know, they are not gaining anything. They are gaining knowledge, yes, but I know that they pay money, so it won't sit right with me if I am charging people, for basically losing money. I won't sleep at night. That's why I'm trying as much as possible to bring in more value to the premium service. You know, this to me is not about getting rich. Of course, if I did this and I had about say 10,000 premium members, I would make a lot of money. I could basically become extremely wealthy that way. But to what end? To what end? What's the end goal there? You want a community. You don't want just followers. You don't want just getting rich. The whole idea of getting rich is when other people are happy with you. That's where real joy comes. It's when people smile when they hear about you. That's where I think happiness resides. So yeah, that's kind of why I put it on a 15-day period. But I consulted with the rest of my team. I am not working alone, so I can't just make random decisions and regardless of how they will feel about it. So I consulted them and I told them that, what do you guys think? We put this on a 15-day free period where everyone can access and you don't have to pay again for the 15-day, and we try as much as possible to make it again profitable. With the markets too, it's really been a crappy month so far. Last month I only lost a trade this month. The entire last month I took 14 trades last month, and I did not lose one of them. The list of my trades got 50% profit last month. Getting the average would make 120% per trade last month. My average profit last month was 120%. All my trades will go well last month, but this month it's been terrible. To be honest, it's been terrible. I'm just telling you guys this now because we are more like a community here, a family, I would say. So yeah, that's kind of the reason. And also, I would really want that when I make a call, don't come and ask me if I'm still sure of it, or if what do I really think. Do I think it's really going to make it? This trading involves a lot of emotion. There is a lot of emotion involved with trading, especially when you're doing it with people. I could trade perfectly alone. I would have extremely low, or say extremely high win rate if I was trading alone, because there I don't really have all the emotion on me. I can take extreme risks because I know I'm risking my own money. But when I'm doing that with other people's money, it's extreme. Yesterday, if I was the only one trading, I could have left Polkadot open, but I did not because I signaled it on the isolated, and I mistakenly had it on cross. I couldn't sleep knowing that it's on cross. On cross means the stop loss may not be, it may not um, get stopped even if it went below your stop loss, because your entire portfolio collateralizes the trade. So that's why I closed it at a 9% loss. And that's actually fine because 9% is 9% of 3% of portfolio, so it's not really huge. So far, the $1,000 that I sent to BitGet has about $1,063 now. But if you were to take all the trades that we've got in the premium service up till now, then you are not in profits, sadly. But that's the truth, and that's why I will try as much as possible to make it profitable again, and I'm bringing more services too. All of this, the whole premium money. I've been talking with a guy so far, on I'm starting a website, and I want this to be free, totally free for premium members. It will have a good percentage off for OG members. That is, if you're an OG and you are not in premium, you will have like a coupon code or something that you will pay less. But for every other average person that finds the website, that person will have to pay for the premium itself. That's the website cost. So basically that's what I'm working on now. Can you I'll do a recap of the last video. Hey, I'm doing fine, Koala. So so for now, that's what I'm working on, the website. I want a website where when you take every trade, it will automatically register the trade that you took, and all your activity, all your trading and investment activity. You will be able to have a follow-up site that does that automatically, so that say in a month you will be able to track how good you have been doing everything. Websites like this don't usually work because it involves a lot of trust in the person that has the website. Because that person basically will have your info. So it has to be done by someone you trust. I'd like to think that you trust me. So that's why I'm creating the website. It will also have other use cases, like a portfolio manager. So all the coins that you will have on your portfolio, it will have like a feed section, a news feed section, where any latest news on any coin that you are holding on any exchange, that website should be updating you about that coin. Maybe if there is to be an upgrade in the future, it will also have that updated on your feed section. So it's basically solving a lot of problems. So that's actually one of the reasons why I'm thinking of the OG NFT stuff. So you'll be able to connect a wallet and have a discount if you are not paying for premium. But if you're paying for premium, all of this will be for free for you. So that's my idea. Anyway, I don't know. I think it's a good idea. I think it's going to help a lot. Even I will need it. So for now, that's what I think. I think it's a good idea. A bit how to analyze low market cap coins. All right, let's just run down the whole FIB stuff. Yes. So first of all, you have to understand that Fibonacci is a patterns-based indicator. So all of the levels that you would see on the FIB, all of these levels, these are patterns. Yes. So if you look at the Fibonacci spiral, you'll see something that looks like so. I've shown this a lot of the times. um, if we go here, Fibonacci spiral. So yeah, you would see something that looks like so. All of this that you see here, this is how Fibonacci basically works. So you will even see it on this how do they call this again? Forgotten, I don't know. Even in your ear you will find this pattern. You will find it everywhere in the universe. You will find it everywhere, like everywhere. From the way that children are in the, even the way children are in the womb, we follow this pattern. Even with this how do they call this again? Oh god, my mind really switches off sometimes. Octopuses, yes, you would also have them doing this. Flowers everywhere, waves, the sky, everywhere in nature you will always find the petals of flower. How many petals are there? You will always find some strange numbers. The galaxy, everywhere you will find this. Even the Mona Lisa painting, you will find it. Even our face, even your hair, you will find that your hair has a pattern to it. Yes, so it grows to a center somewhere. Everyone has it. Everyone, even in your ear, your hand, it's everywhere, literally everywhere. You cannot hide from it. Even an egg, it has it. So I mean, literally everywhere. Even these designs, look, your the face here, everywhere you will find Fibonacci. So some people thought that if this is everywhere, then it may as well be in price action. Yeah, so it can't just be everywhere. It has to be if it's following everything in nature, and humans are of nature, and we buy and sell based on what we think or anticipate about the future, then what we do with price action should also be reflected through Fibonacci golden ratios. All right, so that's simply how you can look at it. So that I'm just putting it that way so that we don't just become too esoteric with the whole stuff here. So yeah, let's take this from here, and no, let's just bring it here. All right, now this is the trend based, but we will start with this one, the regular Fib retracement, the Fibonacci retracement. Now what you have to always understand, yeah, so now what you have to always understand is you have to look at market structure first. Yeah, are we in an uptrend or in a downtrend? In an uptrend we will be going like so. Yes, this is an uptrend, higher highs and higher lows. In a downtrend, this will be the opposite, so you will have lower highs and lower lows. Okay, let's bring that back like so. So first you identify the uptrend. So uptrends are characterized by higher highs and higher lows, but higher lows simply mean that we have a high and we have a retracement of that high, and then we have another high. So retracement to where? To a Fib ratio. To a Fib ratio. Now part of this has to just do with belief. You're just going to have to believe that it will go there, so yeah. Why? Because, well, the Fib guy, he said so, right? And it works like a lot of the times that I've just become used to it. There is no scientific way to really prove that it's going to go there. It just finds its way there. And yeah, it's spooky at times, but it just happens that way, so we just have to accept it. Well, we are all using it for our own benefit, so we may as well just use it. So in an uptrend, you are taking your Fib retracement from the bottom to the top, because you are finding areas where price is going to retrace to. Therefore, you have to take the Fib retracement from the bottom to the top of that price movement. So if you have price movement like so, you see that it's in an uptrend. Yes, therefore you have to take your fib retracement here from the bottom to the top of that price movement. Now that's weird that it's even retracing back to some fib level here. Anyway, but I won't believe in that anyway, because that's just random stuff. But it's weird. So they are used in a correction. Yes, they are used in correction. You can use it in a correction in the market, and uptrend and downtrend you can use it. So you use it from the bottom to the top in an uptrend, and from the top to the bottom in a downtrend. So in a downtrend like so, nope. So in a downtrend like so, you'll take it from the top of the move to the bottom. This is the bottom, yes? So you put it here at the bottom of the move. That is your fib retracement. Now, when you are taking it from the top to the bottom, what you are trying to do is calculate where price will come back to before continuing that move. All right, so yeah, so from the top here you are trying to calculate where price, because price must come back to somewhere before going to the downside, but you do not know where. So you are using these fib retracement levels to know where it can possibly bounce from before continuing the move to the downside. Now I always use, as you all know, I'm a patterns guy, so I use patterns in correlation with fib levels. I also use the stochastic RSI to confirm if it can actually bounce off of any of those levels, because you really never know where it will bounce. Yes, for example, if we draw it from the bottom to the top here, we have a lot of golden ratios. These are the golden ratios, if you are wondering. So we have the 0.5. The 0.5 to the 0.618 is called the golden pocket. So this level here is the golden pocket. It is just seen as a zone where when price closes to the downside of this, it will easily go to this 1.618. If it closes to the upside and manages to go through the 0.5 and the 0.382, we have a high possibility of price continuing to go to the upside. Now you might be like, to what upside? I will come back to that in a moment. So yeah, so when we are looking at this, we really do not know from what level it is going to bounce off of. Like, we don't know if it's going to bounce off here, we don't know if it will be here, and we don't know if it will be here to continue the downside move. So with this, we have to associate that with the stochastic RSI. Now, for example, if your fib retracement, let's just take a random example here. Okay, now we are here. All right, we are here. So we have this fractal. Where is the fractal? Let's go to the, now it's always important to use this on the 4 hourly. If you're using this from 4 hourly to daily, 4 hourly, daily, 3 day, and weekly. These are the best time frames to use this. If you want to scalp, you can also use it in the 1 hour and say 30-minute time frame. 30-minute, 15-minute time frame also works, but that will mean that you are working in a very tight gap. Yeah, so you cannot try to make a longer term prediction from that. You have to use them, and they are not so powerful in these lower time frames. You need a higher time frame for maximum confirmation. Maximum confirmation would come from 4 hourly to daily, 4 hourly, daily time frames. These are good Now there is something we can easily notice here. This is an inverted chart. Yes, this is an inverted chart, and just a quick note, when price is doing this, when you see price doing this, consolidating in a zone after a move to the upside, it's considered bullish. But this is an inverted chart, so if we do this, this is still very well bearish. So even if it comes up to here, we have a high chance of it continuing this entire move like so, which will put us at 11k, and 11k is exactly 85% discount from 69k. Anyway, so we have this fractal here. Let's go to, this is the 4-hourly, but it's too choked up there. I want a higher time frame so that you can see it clearly. Okay, all right, so far so good. If everything is okay, if you have any questions, just let me know. That's the whole reason of this. That's why we are here. If you have any questions, just let me know as we go, even if it sounds silly. Ask me anything as we go on so that you get the most out of this tutorial. Okay, so wow, that daily really, it's very, I like it. I like it here. I like it here because this will be a huge move to catch. There's a high chance I will start to DCA into short positions later. Yeah, just so that I catch it. Okay, so this is the daily time frame here. Yes, now how do we know from where to draw our Fibonacci here? We have to take out this fractal and take the Fibonacci only for this fractal here. What do I mean by that? We have this is an entire fractal on its own. Yeah, so this, starting from here to here, that is a fractal, and from here to here, what was the last video about? Okay, perhaps we should make no, the last video was I have that in my when to use body and when to use from the week. Okay, we'll come to that. All right, the last video was just an update on what Bitcoin could do here. You still have the video on the live on my latest YouTube live, so you can just watch that later. It's about I think that's like 15-minute long video. We're just talking about what Bitcoin could do here. We were identifying a bull pennant. We're identifying this bull pennant here, and we were saying that BTC could easily come down a bit, then go to the upside. So we have this here. This is the bull pennant. Now this is on the 1-hourly time frame, so I would really like to use the weeks instead. Yeah, on the very low time frames, it's better to use the weeks because you know that if it takes off those weeks, it will be going to the upside. On higher time frames, you want more confirmation, so you want the bodies instead. But this is just with drawing your patterns. Yeah, with Fibonacci, we are going to explain how and when you should be using weeks instead of bodies. I mean, the live 2 weeks ago. What live 2 weeks ago? Yeah, yeah, that was about patterns. That was about patterns. But as we go along, we will be coming back to all of that. Yeah, we'll always be having recaps. It's not like it's said and done, because if I was to talk about all the patterns that I know, that could take a day. Not a day, maybe days. And if we were to explain everything, like everything, that would take days. So we just have to explain it as we go along. Yeah. So we have to take this out of the picture, because this is an entire fractal on its own, and this is its own fractal, and we have to understand where this is going to go. We could as well understand immediately where this is going to go. So we take this out of the picture and we are talking about this. Or we could start with this one if you guys want. We could start with this one because we already have this here, so that we will use this as confirmation for what we are talking about here. All right, so now to get this, you must understand where this actually comes out of this, because this is an entire one. This is another one. This is another one forming here. So to get this, you have to understand where this breaks out of here, and to do that you need to draw a trend line here to show where it broke out of this structure, so that you must always respect the price here. If we draw that like so, yeah, so this entire fractal starts from this candle here. Yes, you must obey this trend line, and then that will tell you where this fractal starts. If you took the fractal from here, it may not give you the same measurement. It may not give you the same measurement, so you have to take it from where it broke out of this one, and you also have to take this one from where it broke out of this one, and that place is here. Here, this candle, not this one. This one is still part of this. You have to take it from this candle. So we take this from this candle here. Just like price action, the live classes will have retraces. Interesting. Yeah, that's interesting thought. Okay, so all right, so we start from this candle here. Now this is a downtrending price action, so you take that like so. The lowest part of the body is where you want to take that price action. So this lowest part of the body here, that's where you want to take it. Yes, so we're using the regular fib retracement here. Regular, that's fib retracement, not trend-based fib extension. We're using the regular one for now. So now you understand that this just consolidated in this. If this managed to break the 0.618 here, it would have gone up to here. So basically the 0.382, 0.5, 0.618, this is where you want the highest price action. This is what decides if this is going up or down. If it does not break the 0.618 and the 0.5, that if it does not close above the golden ratio on a downtrend, so if it's trending downwards and retraces back up, if that retracement does not break above the 0.618 and close a candle there, especially on the daily time frame, then it is going to continue going to the upside. For example, here it came to 25k, approximately $25,100. Yes, now this candle here is your confirmation that it's going to continue going to the downside. It's going to continue this movement, because this is your initial action. This, it came down and started to retrace up here. It went above the 0.382. That's a confirmation that it will go to the 0.5. When it goes above the 0.382, when it closes above it, it will go to the 0.5. Now what you would expect is if it closes above the 0.5, you start to anticipate the 0.618. Now it did not even go there, really. It just came right back down and closed below the 0.5. So now your thoughts change immediately. That's why I always say that you cannot really have one single thought trading all of this. your mind changes as price action changes. Now, if you are to follow this strategy alone, that will make you miss out on a lot of opportunities. That is why you have to include patterns in that strategy. Higher highs and higher lows simply means an ascending channel, or say a rising wedge. So you have this, you have higher highs here and higher lows here, and so you take this like so, and you are using only the bodies in this case because this is the daily time frame. You're using these bodies like so. Any question? Not yet. So you are using these bodies like so. So you are using the candle closes here. So you have this here, you have this here, first, second, third here, you have this here, you have this as the first. Actually, that's the first candle close. You need to respect price action. So you have this one right here, because you want that your trend line should be touched by a candle close at least 3 times. Most of the times it will touch 3 to 2 or 2 to 3 or more, but you want at least 3 times on one end of the trend line, and this one is the one we are looking out for. If a daily candle closes below that trend line, it's signaling a dump. The dump back to where? Back to the initials of that price progression. So the initial here is at 19.2k here. So as you continue to go up, that's what you'll be watching out for. But you are also watching the Fibonacci ratios. Is it closing above the 0.618? If it did close above here, if it went and did this and confirmed a daily candle here, you want a confirmation. If that does happen here, you are switching bullish, because that will now be a rounding bottom. That will be a rounding bottom. Now, immediately when that does happen, you are switching bullish, and you will start to target this. You'll start to target something like this. And if that even happened, it will put you at the 1.618. So if it closes the 0.618 when upon retracement from the downside, because it's going down, so when it's going down, you are taking your fib retracement from the top of the fractal to the bottom. So the top is this candle here that starts this next phase, yeah, and the bottom is the lowest point. That lowest point can even be this one right up here. It can even be this one. So that fractal will be here, because this is the close right here. So that bottom is the lowest point here, because we can't be using this one because this had not yet happened if we are looking at this here. So this will be the lowest point, and this will be the June closing candle here. So we are looking at this one. Yes. Now if you take this from here to the bottom close here, that will give you the 0.618 at $26,000. So if a daily candle closes up here, you want a confirmation candle. A confirmation candle is another daily candle closing up here. That is confirming to you that we are out of the gallows. Yeah. So you take this. When that does happen up here, you have to consider this as a rounding bottom, and any retracement here should give you a handle, which will be a cup and handle. So as price action happens, it paints the picture of whatever pattern you are looking at. Yes, so a retracement here to the 0.5, you would want it to still go up because you have a confirmation up here. That should be giving you a cup and handle pattern. So a cup and handle pattern is basically a rounding bottom and a smaller retracement after that rounding bottom, giving you a cup and handle pattern. So yeah, that's what you would be expecting if that did happen over here. All right, so but the final target for that will be from the low right here to the to where it broke out of the 0.618, which will give you a target of the 1.618 up here. So when it breaks the 0.618, you are targeting the 1.618. If it doesn't, if it comes back down, you start to target where it started even the first place. So the first start here will be the lowest point of the wedge, would be back, which will be back to 19.2k. Rounding bottom September 13th, 4 hourly. September. What the hell is September? September 13th. What? Oh, 4 hourly. Anyway, let's continue this so that we don't ruin the entire show. Okay, so that would be what you'll be expecting here, and that is basically how you use the normal Fibonacci retracement tool. Yeah, from the top to the bottom in a downtrend, that makes you know where it will retrace to, and if it bounces off of this any of these golden ratios here and with a confirmation candle, if that does go below your pattern, so your pattern here is an ascending wedge or rising wedge or channel, even they are all the same. If that did happen and close below your channel here, you are confirming a breakdown because it has been rejected by a Fibonacci ratio, and it also closed below your ascending trend line here, which was the support of the entire movement. Yes, so that's basically how you confirm a downtrend there. Cup and handle on the daily. Yeah, you could see that as a cup and handle easily. This, you could see that as a cup and handle. So we will come to that. Yeah, we'll come to that. Okay, so we are going to do this prediction here, all of us. But this, you cannot really, you don't want to be saying this as a cup and handle really, because the daily here is heavily overbought. Look at it. It's heavily overbought. Of course, it can be that way for a very long time, but it only makes you know that you will have a huge dump ahead. Now, basically, that is how you use the the retracement Fibonacci. Now, for the trend-based Fib, we will come to how you can use the retracement on an uptrend actually. So let's say we want to use it on an uptrend. This is our uptrend here. Let's go for the uptrend first before we go to the trend-based Fib. So if you want to use it on an uptrend, you want to measure where it is most likely going to retrace before continuing your upward move thesis. But here you won't really be expecting it to just go back up. Yeah, you won't really be expecting it to go back up because it has already been confirmed by this breakdown here. This is where you wanted to catch its descent. This is what you wanted to do. You wanted to catch its descent here. Yes, you wanted to catch that here, but this has already been, it's clear that it's not going to go back up because it has broken this trend line that was formed for 33 days. This trend line had a 33-day period, so it got broken down on this day. You have to be looking for a dump here. You have to be looking for this dump. Yeah. Now, when trading, it's a lot different because you're using money. You know, observing it and talking about it like this, it's easy. You could I could make insane predictions here. But if I was to, do this with actual money, emotions get, emotion get in the way. So, and it's even worse when you're doing it for people. That's worst, because, well, you are like, if you lose, a lot of people are going to lose. It's not just you. That's added emotion, coupled with people who are always like, are you still sure? Is this going to go to your 7K? I mean, that brings a lot of emotion, to the table, and it's a lot more difficult that way. I see a lot of people, especially in the Discord group. Some people do good trades, and I'm happy for them. And some people, because they do good trades, they would want to, be a caller in the group and stuff like that. I've had a lot of cases. I've had very nice people over, the course of the Discord group who were good at first. I've seen their trades, and I knew that, oh, this person could be a good asset. But when they came, it all changed because of the emotion. Dealing with people is not easy at all. It's not. Now, this gravestone doji here was already a warning of a possible dump also, and it's only now I see it. Yeah, that does happen. And the gravestone doji is a bearish pin bar pattern too. Bearish pin bar pattern is when you have a bullish candle followed by a doji like this one. That's a bearish pin bar pattern. It's always a sign of a drop soon, like this one here. You can also see it here. Even this one, you will always find it on charts, and when you see it, anticipate a huge dump. So we should be on the lookout for that here. This is not it. This is not it here. So that you couldn't really be thinking that it's going to go back up here, but let's just say it was going for the sake of education. Now let's just say we were assuming that it's going to continue the upward move here. So you take this from the bottom to the top instead. So bottom to the top here is at 25k. So you have the bottom to the top there. Now you see that price here, and even from the bottom to the top, it's still respecting the golden ratios, but this close here is confirming your downside projection. But it won't really work well in this case, because it's already been confirmed up there that it's going to go to the downside. So you wouldn't really see any huge respect for the golden ratios. It works better when the pattern itself confirms the movement. When the pattern confirms the movement, you want to find a retracement zone on the Fibonacci. That's what you want to find, because now this is a downtrending market. So from here you wouldn't really find good zones, though it's kind of working here. But you see it comes up to the 0.5 many times. This is on the daily candle. It comes here first day, second day, third day, fourth day, and it gets rejected to the downside, because from here, if it went up and surpassed the 0.382, it's going to continue going to the upside. And the pattern itself has refused all of that, because the target for it is the bottom of the structure. So that is that for measuring the Fib retracement. Now, one more thing you would have to know about Fib retracements are they are subjective. They are very subjective, meaning that your 0.5 or your 0.618 or 0.382 is not the same as mine, except we are looking at one candle. Now, all of this that we see here, so if we see 30 days, that's a month's candle. On a monthly time frame, that a single candle. So it means that each single candle here also has its own Fib retracement zones, if we can all agree on that. It also means that when you see a drop on a single candle, you can take measurements from the open of the candle to the close of that candle. The open of that candle to the close of that candle gives you zones where price will want to retrace to back in the future. So This is what I mean. We are looking at this candle here, yes? So if we're looking at this candle, we know that we want price to retrace back to this candle sometime in the future. We do not know when, but we expect that price will come back to it sometime in the future, because this is on the daily time frame. On the say 1 hourly time frame, this single candle here, let's just go right to it. So this single candle like this is many hours. Let's go to the 1 hourly. Where is it? Okay, it should be somewhere around here. Okay, good. These are the hourly candles. These are the ones that we were looking at. So from here to here was a single day. This is 24 hours, yes, of price action. So if you are drawing from the top, because this is a downtrending market, so that's the top of the day to the low right here. Now you see that price always comes back to the 0.382 before continuing to the downside. You always want price to come back 50% of any candle when it initially drops, especially on the 4 hourly. From the 1 hourly, 4 hourly, daily, you want price to come back half of that candle, at least half of that candle. Now we want that price comes back half of that candle, so we are thinking that price is going to go up. Therefore we will be taking fib retracement from the bottom of that candle to the top of the candle, because we are anticipating that price is going to go up. We want to go short in this case, so we want to short 50%, at least 50% retracement of that candle. Now the 0.65 zone is an extremely strong zone. So when you want to short in this case, and you know that that's a very volatile downtrending market, you know that price could easily get stopped at the 0.68 zone right here. So you put your short position at that zero, just a bit in front of the 0.65 zone right here, and a bit above the 0.38 zone. Now why? Because you know that price could easily come here and go back to the downside. You don't want to put it exactly at the 0.65 or at the 0.618, because you know that just this zone alone can take price back to the it really happens like magic. That's why sometimes I would make a limit order and you will find that price bounces just on top of it and does not even go up. It continues to the downside. That's because it's almost like price knows that there is a zone here I should not cross. So you want that price would come here and then continue to the downside. So you could make your expectation like that. Now, why are you putting it on top of the 0.382? You could use this strategy actually just if you want to scalp the entire day. It's really that I really do not have the time to sit and scalp the entire day. So I really can't. You know, I have to do a lot of research. This is the bear market. This is the moment that we don't want to miss. If you miss now, you will have to wait until 2026, 2027 for another bear market. That's considering that this is gonna, you know, continue the same way. Like this time is different. It's the same. So that will be the only time we're going to have another bear market, and we want to make the most of this one. So I am really doing a lot of research and reading articles and reading news and stuff. So yeah. Now, so what you would expect here, this is on a daily time frame, as you can see. So you want to take from the top, from the bottom to the top. If you are anticipating that price is going to retrace back up, so you take from the bottom to the top. if you are anticipating that price is going to retrace back down before continuing up, you take from the top to the bottom. If everyone is in understanding, just let me know so that I can continue. So here we are taking from the bottom of that candle to the top, and we are just going to set like a little on the 4 hourly here on a candle so that it happens live. Yeah, so we take from the bottom here to the top of the movement, yes, of the movement, and we are targeting the 0.618. The golden pocket is the 0.65. That's just a bit below the 0.618. It's kind of around it actually, but it's somewhere here. So that's where you have my yellow line here. It comes out on the around the 0.618. Yeah, but you see that price is basically bouncing at the 0.618 here on with this candle. Normally you would want price to retrace 50% of that candle, so you don't want to have your stop loss here. Since this is on the daily time frame, you could do that. You could put it here, but you want to swing the entire move, so you put it up here above the 0.382, because you know that if it goes above the 0.382, very high chance it's just going to continue going up. There is no need just sitting in the losses. Yes, so you put it this short is in the daily, so your trade would happen days later, most possibly, but it can happen the same day. For example, FDT did the same thing, yeah, but it plummeted in a day. Yeah, but most possibly you would expect it to happen in days to come. Your target will be in days to come, so this is a huge swing trade. Yeah, but I would take my my entries on the 4 hourly time, looking at the 4 hourly time frame when I want to do a swing trade. For a position trade, I would be looking at which I will take, you know, as we go closer to the bottom. I would want to take a position trade there. That takes a longer time, very longer time to, you know, to play out. I will be taking it from the daily time frame. So like this, if you are taking this target here at the here, this is the 1.618, you know that price is going to go there someday. It did go there, but it just had to take many days to get there. So you can see the 1.618, you will always want price to go here. If it closes below here, it is validating another fractal. By this candle closing below this zone that we see here, it's validating something else, so you will have to now measure this one. Okay, so that is what we will be looking at here. So if you want to capture this movement, you always want your stop loss to be above the 0.382. For a scalp, you want it to be slightly above the 0.618 for a scalp. Now for a scalp too, I will not be taking it from the 0.65 because that's the golden pocket. I will want to take it slightly above the 0.618 with very high leverage. That's what I'll want to do, but not on the 1 hourly. I'll be doing this on the 15-minute time frame. Yeah, 15-minute time frame will give you a scalp, a perfect 15-minute time frame, or even 5-minute time frame will give you a good scalp. Yeah, and even my scalps do have extreme targets. I really do not know how to target, you know, maybe say 0.30%. I don't know how to do that. I like 2%, 4%, 10%, 15%. That's what I like to capture, because it didn't retrace after the daily close. Yes, it did not. These are all probabilities. It must not retrace. Okay, that's what I was waiting for when I talked about that was 1 inch. Yeah, I was waiting for a retracement on the 4 hourly. If that retracement did happen, we would have been in serious profits. The problem with not waiting for a retracement is that you will still have to have this as your stop loss. So if you were not going to wait for a retracement here, your stop loss will be a 12% stop loss, which simply means you can't take a lot of leverage here. Your maximum leverage here should be, say, a 3x. Yeah, if you're taking a 10%, a 10x leverage here, that will be on, probably be on cross or something. Yeah, that can obliterate your entire portfolio if you're taking very high leverage. So to take maximum leverage, you must wait for this retracement. It's simply the way it is. And yeah, you don't just want to be in a trade for the sake of being in a trade. You want to actually take a trade that you are sure of, you know. So yeah, that's what you'll be waiting for here if you wanted to take this move, because you are waiting, you think it's going to go to the upside, so you are taking your fib extension from the you're taking your fib extension from the bottom to the top because you think it's going to go up. You take extensions from the bottom to the top. Those are the zones that you think price can be deflected from. So if it goes to the 0.618, you expect that it can bounce off of there and continue its move to the downside. You know that if it surpasses that 0.618 in a non-volatile market, it can easily surpass the 0.618 and go for the 0.5. The 0.5 will be 50% retracement of that candle. Okay, so this is actually 61%, this is actually 50%, this is 38%. Okay, so you are looking at a 50% retracement of that candle, and one day it will come back for that 50% retracement. And yes, it did at 25k. So you can see it happening here. You have the 50% retracement of that candle here. That 50% retracement actually happened here at 24,600. You can see that as it came for 50% retracement, this is the 50% retracement here. Remember that this fractal here is the daily candle, yes? The daily candle, and we do have 50% retracement. So 50% retracement will be here. All right, so we do have 50% retracement coming in here. But after that 50% retracement, we have the 0.382 fib ratio, which is the next strongest fib ratio. So that strongest fib ratio means that if it closes above this one here, then we are going to the upside. Now just have that in mind. Let's go back to the daily time frame here. Let's go back to this daily time frame so that we can actually understand what's going on here. All right, so we remember that our fractal was from here, yes? So let's take that fractal, this Fibonacci from here, and go to the bottom of this right here. Now, very good. You will see that those 50% are very close, extremely close. This 50% from your, from this right here, this 50%, if drawn correctly down here, because this is this low June low here, yeah, the close right here. If you take it like so, you are trying to measure the entire fractal now. So you take this to the top right here where it broke from here, yes? So you see that they are eerily close. So this region between these two 50%, that is how I come about my area of interest. I always talk about area of interest. I take this, and not only this, because I will have patterns that are leading me to this. When I have multiples, when I have patterns leading me to this, when I have my Fibonacci extensions and retracements leading me to this, and we will take the trend-based fib and see if we will have another point of confluence here. If we do have that point of confluence, and by the end of this exercise we will go to present price action and see if we can all make a strong prediction together. I think that will be interesting. to see it happen later. It will be interesting. I'll probably take maybe like a slide of it and post on TikTok or something. So we are confirming by this analysis that this daily candle here, this was the 50% retracement of that daily candle. We do expect that price will come back here, but that if we just sat and waited like I did with 1 inch, well, you'll have to wait 140 days for price to come back here. Yeah, so those are the problems. So yeah, I really do need to be more aggressive with my calling strategy, but it's really, as I tell you guys, it's a lot more difficult doing that when you're doing it with other people's money. With each position that I go in with on BitGet, it's a bit more difficult when you're doing it and you know that these are other people's money. If I don't drink, but let's say I was a drunkard or something and I drank a lot and I just went in for a pot, I would basically obliterate your entire portfolio. So it really has to do with, I have to manage my risks a lot more because I am using other people's money. I will start to be I will be more aggressive when I know that we are in good profits. Okay, when I must have doubled that portfolio, then I will be more aggressive because I know that even if you lose, you're losing profits. But I will be just more aggressive with, say, a quarter of the amount. So expect me to be a bit more aggressive when I would have 2x'd that portfolio. But for now, really, the markets are crappy, to be honest. The markets are a stupid market. Like, what is this? We've been here for weeks. Anyway, so that is how you get this. When you see price move down like so, you know there will be a 50% retracement. This is that 50%. You can check, you can look it out everywhere. You will always find 50% retracement of the candle. When you go to the 50% retracement of that candle, for here we have, this is the fib levels of this candle because it's going from the bottom, from the top of the candle to the bottom, or from the open of this bearish candle to the close of the bearish candle. We take from the top to the bottom. Those are the fib retracements. Yes, now we think it is going to go to the upside. Yes, so we pull our Fibonacci retracement tool from the bottom of the candle to the top of the candle. Now we have the bottom of the candle here, the 0.618 here at exactly this here. Watch what this candle, some people would be like, no, Binance CZ said this and the market's pumped. Then how is it that it will only come to stop here? I mean, look at this. How did this only come to happen with this candle here? Yes, so yeah, I really do find this fascinating sometimes. Like, really, this is the 50% retracement. Look at this close here, 50% retracement. Look at that close. Look at it. Look, it's closing right at that 50% retracement. And here is something you also have to know. If your candle is closing just beneath, and let's put it exactly at the 50% retracement, good. If it is closing just beneath, even if it is a bullish candle, if the close is just beneath your resistance, know that that is a rejection. You confirm it with a bearish candle that follows. If a bearish candle follows, it will not only give you a bearish engulfing pattern, but it will give you a strong bearish action, especially when it's a big one like this one. Yeah, because it's engulfing all of these buyers here. This is showing strong selling pressure. I started my short around here. That was 20.7. 20.7 was around here. So no, 20.7. 20 point, yeah, I started my short around here to 19.3. 19.3 around here. because I thought perhaps it goes back up. You know, that was a lot of profits to leave aside. Yeah, around here I made about 4,000 in this trade. Yeah, so because I was very sure this actually broke my my line here. If I looked on the 4 hourly, so I was really sure here. That's what I'm looking out for here. This is the trade I am waiting for. This will be godly, hopefully, anyway. So that is what we are looking out for here. Now you will also see that it did not go for the 0.382 here. If it did go for the 0.382 and close above it, then you start to restructure your ideas of a downward trending market. Okay, so that is that for fib retracements. When you expect that price is going to go back up, you pull your fib from the or dead market. Do we have any calls or dead market? We are going to look for a call just now. What is that happening there? When we are done with this, we're going to look for a call all together here. All right, so that is that for this price movement here. When you see it going, when you think it's going to go retrace back up, you have to pull your fib from the close of the previous candle to the open. This is the open here. You pull it from the close here to the upside. This is the zone where you want to enter. For a scalp, you have to put it right above, somewhere above this retracement, this ratio here. So for a short, you would put it like so, and somewhere above here. So you only want like 0.30, 0.20, that's fine. Sometimes I would even go for 0.19 because I want to be heavily leveraged. Yeah, because if it goes above that, it's going to go up here. This is on the daily, by the way, so it's a bit yeah, like so. So you want it to look like so. All right, yeah, but this is on the daily, so it will take time. On the lower time frames, you will find the retracements happening easily. Let's go to like the 15-minute time frame. You'll find the retracements happening. Okay, like here, let's go for this candle. With every strategy, you will always find some confluences. Like here, this right here would be a vector candle. This one, that will be a vector candle, and it will, this one also will be a vector candle. This one will, and it will be recovered. So you are also keeping your eyes open for that one. This would be a vector candle, I believe. This one also, and the Perda will be helping you all with this. If you are in Telegram, I do have one of my analysts in the Discord group who makes one-on-one sessions with you all. I think I would talk to the mode to enable tickets. You can always have tickets, like open up tickets on Telegram, you know, so that you can make sessions with him. He will teach you other methods to trading. You can, it's good to know all of them, you know, and you can then make yours, because this is like mine. You may not have like other people using the exact strategy as me. So, but even just for this right here, I'll be betting that price goes up. Yeah, here I'll be betting that price goes up, just from looking at this, because we have a pump and we have buyers holding this fractal up like so. So this pump, then consolidation while it stays up is bullish. A drop and consolidation while it stays down is bearish. So yeah, this yeah, I would be longing here. I would be longing here with my stop loss below this wicks here, because if it removes that wick, it's going down. Yeah, simple as that. I'll prepare a position really after this video. I'll prepare like 2 positions. I really do not want to prepare a lot of positions because that will just expose more risk, you know, in this type of market. Like, what is this? In this it's just risky for nothing. We need good positions, we need good price action. Yeah, we need good price action. I still think it's going to go up from here. Anyway, so yeah, that is that for fib retracement. This, the usual one. I know a lot of people already know how to use this usual one, but there are a lot of people who never used the trend-based fib. Okay, so with trend-based fib, it's basically, it works say a bit the same like the regular fib retracement, but instead of the yeah, we'll check it up. But instead of the closes here, that's the closing levels here, we are using the wicks. And not only the wicks, we are using the swing highs and the swing lows. Okay, so now we look at this fractal here. This is the fractal we are looking at, this one. Yes, so we are taking this wick here. We want to differentiate, we want to take out this fractal so that we can examine it. We want to use it for our analysis with the trend-based fib. So this is the trend-based fib extension here. So we want to use this one you know, to know what or where price is going to retrace to or come back to here. So to know that, we want to take now we are considering that we only have this, we have a vertical line. Okay, so we only have this right here. Okay, so we only have this right here, and we think, so first I told you, you have to, you know, understand market structure. By that I mean, where is price going? Are we in an uptrend or in a downtrend? Second, identify a pattern. We are seeing a bear flag here. I hope we can all say that we are seeing what is swing high and what is swing low. So when you find a price doing this right here, like these wicks, like so, this is a swing high here, but it's not really swing high because it's low. So this is our swing low here. So when you find price leaving you these huge wicks to the downside here while going on a downtrend, that is your swing low. And this is not ideal actually, but we will take it as our swing high here. Yes, even this is a swing high here, these are swing highs here, just those long wicks to the upside here. Swing high, swing high, swing low. This is a swing low here, this is also a swing low, this is one of them. So when you find the price doing that and leaving you wicks, that is the swing low, and it's giving you a lot of information on what is happening here. This is telling you that there is strong buying pressure here, because for you to have a wick, it means that buyers are actually buying a lot here. When you find a wick to the upside, it means sellers are selling a lot around these zones up here. It's kind of what you see here. So the trend-based fib is used when you recognize a trend, or aka a pattern. So you use that from this. So you take trend-based fib from this one, so trend-based fib extension, and you come to here. Now, as I said, you must recognize where the entire move begins. The entire move begins from where this this fractal, you know, breaks to the downside. So when it breaks to the downside, it begins another move. Here it started from this one right here. So this could be drawn like so. It started from this one. No, from this. Yes, because you must be able to identify the entire fractal. You must be able to identify, and with this you will take your swing high here, and this is not like ideal, but that's it. You will take it from here. So you take, or let's redefine it in a way that everyone will understand. After you have a pattern break into, or say give you another pattern, you take the next longest wick to the upside. Okay, so from here, this is a bear flag that has been broken to the downside. The next longest wick to the upside is this one, so you are measuring from this one. So this is your first point here. Now the lowest wick to the downside will be your second point of measurement. All right, then the highest wick to the upside will be your third point of measurement. Here is what I mean by that. So we take the trend-based fib from here and we come to that exact tip here. So we put this like so. So that's the first point. So it's three-wave price projection. So you come to the second one here and you put it on the lowest wick, not this one, not this one, and not this one. So you put on this lowest one here, and then you put on the highest one up here. So I just follow it all along so that I can get all the points up here. Good. And that is it. So this is 1, this is 2, and this is 3. Okay, now for a price to continue going to the upside, it must not break the 0.3 to 0.328, the 0.5, and the 0.618, which is the strongest. It could come to rest at the 0.786. This is what you may not find with the regular trend Fibonacci extension. You may not find this one. This one is not really that useful with, but here this is where you want price to come and rest. Now you also use your patterns here for accurate measurements. Okay, so here now, so we have the 0.328, 0.5, 0.618, and the 0.786, and this is on the daily, remember. Now we have the 1.618. Now 1.618 with this one is extremely powerful, because this means when you measure it this way, it means that price will come down to 1.618. Especially when you measure it from a big move like this one, it means that price will come down here. Of course, you use a pattern to confirm. You don't just measure it that way. So what pattern could actually lead down here? Where is the other chart? The other chart is on, I think, on Binance. I think Fibonacci spiral. Binance. If we come here to spot trade, this is my chart for my projection. Okay, I know it's dirty, but yeah. Now if you come here to the 3-day time frame, yes, so yeah, I use Binance for some of my analysis here. So this right here should be at the all-time high. This should be at the all-time high. Okay, so on the 3-day time frame, this is our 3-day time frame chart. On the 3-day time frame, you see a bear flag on Bitcoin. This Bitcoin on the 3-day time frame. This bear flag is what I think has been taking us to all of this plummet ever since. So on the 3-day time frame, BTC broke down from the bear flag here. So you take the measurement. Where is it going to go? It is going to go to this figure would be 6,800. Yes, 6,800. $800. So let's come back to that fractal that we were looking at before. This is about 6,000. So you start to see similarities with this zone right here, but let's just use the fib retracement there and see if we have any confluence with that figure. 1.618 is here. Let's use this one. I think I already drew that one actually. Yeah, because that is it here. So the 1.618 here, let me just take it back so that you guys follow up. All right, I can't cancel all of this because this is like my map that I'm going to use, and you can even see it going up to here at 100 at 247,326. Maybe I'm just crazy there. Maybe this is just some silly thing to do, but yeah, that's how I see it happening. And if it does happen, maybe you know, maybe I was right. So you also see the stochastic here, and we will come to how you can use all of this confirming with the stochastic. The stochastic is at about 46. It becomes overvalued at 80% here. So now it's half. If BTC does go to 18K, there's a high chance that this will become overvalued and we will have our crash. So now let's try the trend-based fib here. So we said the highest point of the fractal, the lowest point, and the highest, the second highest here. Now the second highest is the second highest of the pattern that you are looking at. So we come from, if you have any questions, just let me know in the, it can be a bit confusing, I know. Just let me know in the comments. Let's take this out like so. I don't want to displace all of this, but anyway. Okay, so this candle ends. Okay, I'm just gonna have to shift this, remove, shift. Okay, cool. Now, so we take this from here and we put at the exact all-time high here. So we see that the bear flag here is BTC's most prominent pattern. That's the biggest pattern that we can see from the entire bull market. Yes, that's the biggest pattern that we can see from here. And now I'm even thinking of something else that we will try. So if we take that to the lowest point here, to that 33K. Now remember, I talked about this, I talked about 35 actually. That was 35 because I was shorting from 40, I shorted from 47. Yes, 47 to 37. But we can take this from 33 here, and we put here. We put here. Yes, so we are taking from the all-time high here to this lowest point at 33 because this is the pole of the bear flag. Yes, so we are taking from the top of that pole to the lowest point here, and then to the highest point of the ascending wedge here. So that should give us the retracements that we will need later on. Yes, so that should put us somewhere here. Did I put that correctly? Yeah, if you have any questions, just let me know down in the comments. Now, this is where I found something scary. And I talked about this the other time on the Instagram, and I said that at some point you will have to use hope. Yeah, because there are some crazy things on the charts that do indicate the possibility of a zero, you know. And sometimes when I make some videos, I'm like, if it does go back to the all-time high, sometimes you really just have to, you know, take that courage to invest. Because if you use this fractal, if you use this fractal here, and yeah, if you use this fractal, no, that's not even the second highest. The second highest is up here. The second highest, yeah, the second highest point is this one here. Let's see if it aligns with anything we are looking at. Yeah, if you use this fractal, it will put the 1.618 below 0. This is where I find some very scary stuff. So yeah, we could say maybe it's wrong, maybe, you know, but at the end of the day, that is where hope comes in. Yeah, because it's been right some of the times, say most of the times. And what if we even put it here at this swing high here? Let's see the value it will give us. It still gives us something around 700, because by BTC closing below the 0.618 here, coming and having this consolidation around the 0.86 here, it means that BTC could easily go, not easily, but it has a very high chance of going for the 1.618. The 1.618 will be putting you somewhere around here at $1,000. Now, maybe I'm wrong, maybe, but that anyway will only be the fractal for this bear flag here. So, or from, if you take from the all-time high and you put at the second swing high here, yeah, the first swing high here, that will put you somewhere around 1K. So maybe I'm wrong, maybe I'm wrong, but that's just how it's indicated here. So yeah, it can indeed be terrible sometimes when you measure this. Anyway, so this pattern here, if we are taking, and I took another fractal and I took this from here, this top at 25K, I took this measurement, where is it? Yeah, I took from 25K to 17, the June lows here. So June lows here at 17.65 something for this fractal, and then I came back up here at 22K, so the second high here, that is giving me the 1.618 here. So this is what I will want to go with, because if I go with this, it will be giving me a very, very odd figure, really odd figure. And since this is subjective, I would like to think I am wrong with that measurement. Because even if, for example, if you take this as a double top here, if you're looking at this as a double top, and I'm actually just trying to be sincere with the way these are being drawn, if you're looking at this right here as a double top, the target for it is horrendous. It's disturbing, to say the least, because if you take from here to here, simple measurement, simple, it closes below there. Where are we going? We're going for this at minus. So yeah, we sometimes you will have to really like have some faith. Maybe some faith will have to come into the works. But I think if we are measuring this from here, no, not from there. That will not work from there. That will be on the weekly, I believe, weekly time frame, because we are looking for a bigger move, bigger move. on the on what you use log to measure correctly is down on the no, you mean I should use the logarithmic view here? No, that will be crazy now, won't it? Look, it won't work that way. No, this is so that you see the entire chart. Anyway, so for the trend-based fib, you are taking from the top. No, not log. You are taking from the top. Let's go back here, because going back to that will just go take this whole lesson apart. So we are taking from the top right here to the bottom, top, bottom, and second top up here. So this is what led us into all of this. And even this is a continuation of this right here, because this is the descending triangle. So even this that we are in is just a continuation, and that descending triangle, if we are to take from here, this is our fake out candle here, the two fake out candles. And so this right here, from here to here, if we are to take the fib extension here, how would you measure the fib extension? You would come from the top to the bottom and to the second top up here. And you can see that we are actually just keeping above this and wow, we are basically keeping above the 0.786 up here with this here. So if we break that, we are headed for 10k, and that would be free fall. Yeah, that would easily be free fall. But however, where we will stop here will be here. We'll be stopping here at about 14.3, because that is the second target of this measurement here. So basically with this trend-based fib, you want to use it from the top of this fractal to the bottom, that's the second swing high here, to this second one to the upside here. That should give you your areas of resistance or support down as you go. Now if you are looking at it like it's going to go to the upside instead, because this is considering that we are taking measurements to the downside, so we want to know how far down it will go if it continues to go. Yes, so again we have to use patterns. The 1.618 must also fall together with a pattern. If we do not have any pattern, nothing that is pointing to that 1.618 down here, we cannot really use it. We cannot use it, because if you take like so, as I said, this is all subjective. Yeah, you could choose to take this one. You could choose to take this one and you would still be correct, because you are finding it bouncing off of here. So you could choose to take this one. But for this one, we are assuming that this price action here did not form already. So we take from this one. Yeah, if we take from this one, you will find that price came down here, but it still managed, and it's holding above this zone right here. So as we were even saying in the previous video, if price breaks this here, it's not only breaking. If it comes down here at 17.74, it's not only breaking the ascending trend line, but it's also breaking this fib down here. So yeah, it will have a long way to go to the downside if it did that with an overvalued daily time frame. So this is assuming that you want to know where price will go if it is going to the downside. You want to find areas of retracement if it is going to the downside. And even here, if you are to be clear if price can actually go to the 1.618, you have to measure the entire move to know if that can happen. So we are taking this one here, and we want to take from the close up here, that's the candle here, but let's just take it from where that is. Where is this one? Okay, even up here we are getting 12.326, but from up here, and that still again will be on the 3-day time frame. That will be on the 3-day time frame, and we're having this on the 3-day time frame. We are having this from this bear flag here. From this bear flag here, we are having somewhere here. Bear flag will put us to here at about 8. It's actually 7. It's not supposed to be 8. If I measure that correctly, it should be 7. Oh, this is the weekly 3-day. It should be 7. Yeah, 7.8. It should be, yes, it's 7.8. So if you have the 1.618 here at 10, then you have a very high chance that 7 can happen. Yes, because it's just very close to it. So the 1.618 must have a pattern pointing to it. It must have a pattern pointing to it. If it does not, then it may not work, because this is a trend-based fib. It follows patterns. Patterns mostly are work in threes. Yeah, so you'll draw a line like this, and they will have a single point where it will finally meet, or it will always have, you need price to touch it 3 times. So this fib would also work 3 times. So if you are drawing an ascending wedge, price need to touch it 3 times. A trend-based fib, which you use which is being followed like this, 1, 2, 3, would also need a pattern to confirm the trend. So it's really better you are using this with a pattern in mind. Now if you are to use it on an uptrend, because this is all on the downtrend, you want to know where it's going to go if it continues to go to the downside, then you have to start from the downside instead. For example, let's just use the same example and see if we will have anything there. We had that from here, yes. So we take our trend-based fib, we take from here to here. So the second part is the lowest point up, is the highest point up instead, sorry. So we take the highest point up to the lowest point here. So we are having this up here. Okay, now we find that price is closing below, and it has done that consistently up here. It's coming and it's closing below the 0.5. Now you remember the 0.5 we're talking about before, the 0.5 of this candle. This is the exact 0.5 if we were to take this like so. Where to take this, that's the start of that candle, the start of the fractal. So the 0.5, and no, this is even the 0.5 from, if we are taking the 0.5 from this candle itself from here. So from the start here to the close of the candle, you have the 0.5 here at the exact 0.5 of the trend-based fib. This is telling you that you have a good measurement. So if you had this instead of here, if your measurement was instead of here, you had it somewhere here, it will not give you that 0.5. It will not give you this. Your 0.5 will be somewhere up here. So if you find these confluences like this, you know that you might be extremely correct about that price action. And you have it, if you extend it even like so, it should give you this. So this is these are the two 0.5s happening up here. This is a very strong rejection, very strong rejection. You find price going up there and coming back consistently. This is a very strong rejection, and even this right here also fits in. So yeah, so on an uptrend, you are taking it from the bottom. Let me cancel all of this so that it's not okay. So on an uptrend, you are taking it from the bottom like so, from this bottom to the highest point of this up here. So the highest point is where it breaks out of the previous fractal. Yes, this is this previous one. If you have a trend line like so, it will zip right through it. Is that even it? Is that? Yes, it is. So yeah, so when you take it from here to the downside, you are finding where the highest point where price could go. So you know that here the highest part, or say the highest point of price going to the upside will be this one. This would be the highest point. Now if it closes above this one, then it has obliterated the entire fractal to the downside. It won't go to the downside. A very high degree of certainty, of course, not must, but there is a very high degree of certainty that it will not go to the downside anymore. Now let's try to do all of this with future price action to see if, for people who would maybe watch this video later, let's see if what we are seeing here, if we can actually predict something in the video and it comes to fruition. So we have two daily candles here, and from this one we have already gone more than 50% of its retracement. So there's a very high chance we go even above. When you go and you close a daily candle more than 50%, there is a very high chance you will go above it. Okay, so if we are taking from here, the lowest point is this one. We want to know how far up it can continue to go. If we want to know how far down it will continue to go, we will take from here to here. Yes, so this is where this other price action happens. This is another one. So we start from this candle. Okay, so if we're starting from here, we want to know how far down it can go from here. So we take from this one and we put at the lowest point here. Now we are taking this one here for a reason. We want to be conservative in our measurements. We could take this one, we could take this one, but we want to be conservative, so we are taking the longest the longest week after this one here. So we take this one and we see that price is actually holding above the this 0.236 here. So far as it is here, it is bullish. Insofar as it's not coming down here, it is bullish. And even if it comes down, we have areas of resistance where it will stop. And if we are looking at this, these are the zones where it will continue to go to the downside, and we still have 9,000 there at the 1.618. So if we want to look where it will go to the upside instead, since market looks kind of bullish, we take from the downside here, that's the lowest point here, and we put up here highest point here, and the second low here, not this one, this is too close, so we take the second high. Yeah, so higher highs, higher lows, so we take the second the higher low here, and we are putting that here, not the body, we are putting it on the wick. Okay, now I want you to see something. You see that price is resisting this area here. Now let's take this again from the top to the bottom and to here. So that is basically our area of consolidation. This area, this is where price is consolidating. Anywhere that price is going to break to would be the direction that price is going to go. If it breaks above and closes a candle here with a confirmation candle, then we know that price will continue going to the upside, but the maximum for that will be somewhere around 17.978. so this is a guaranteed short position here. Yes, somewhere around 17.978. And this here, you will want to be on you will want to be shorting this, and what you want to do is capture the entire move to the downside instead. Yeah, but I'm thinking more like 17.6. Why? Because on the weekly candle, that will be half of this candle. That will be half of this weekly candle. Remember, we are talking about no, it won't be half. That half will be 18.6. Oh yeah, 18.7 is what I was talking about in on Instagram. That will be half of this candle, and that's where I think is the maximum for any pump here. But I really do not see it going back to 18.7 just yet. That's highly, I don't see it doing that now. Maybe it will do so in the future, but not now. Maybe it will come here and will be here for weeks, just like we did here. We were here for weeks and weeks. Crazy market. So yeah, so basically let's go to the 4 hourly and do a more shorter term prediction. So basically, I think you can all use this trend-based fib now. We take from this high right here to the lowest point here, highest point here, and we get our zones to the downside. Yes, we get our zones to the downside, but remember that this in itself is a pattern, and if it breaks it, all of these, yeah, they will serve as zones of retracement, but there's a very high chance it will just continue down to here at the 0.618. If it breaks that, you have the 0.786. After that, you have down to here 13k. That's it. That's the huge rush to the downside, and you will find that price will come back here and want to go back up again. Yeah, that is where shorting here would be shorting the bottom, except you have an overvalued 3-day time frame down here, which I don't think will happen, because here already means price has dropped all the way from here to the upside. On the 4 hourly, you would do it like so, from here down, the lowest wick down here, and the highest one up here, down to this higher low here, and you find that price is being rejected at the 0.5 here. Yes, you find that price is being rejected here, but we think it could go. So let's do this. Let's take this fractal, this one I was talking about earlier, before in the video, before I started to make this video. I was talking about an inverted head and shoulders here. So that inverted head and shoulders will look like so. On the 1 hourly, you will see that better. on the 1 hourly, that is your inverted head and shoulders. But as I said, head and shoulders patterns, they like to do the exact opposite, because you are longing here. Yes, if you are longing here, your stop loss will be somewhere around here, so the market is likely to reverse and take that stop loss before going back to the upside. Not only are we seeing an inverted head and shoulders here, we are also seeing a bull pennant here. Okay, so we're just going to leave those we're just going to leave these fib ratios like this and try to do some charting here and see if it will coincide with our fib ratios. So basically this is what I always do. I come to these higher time frames, like on the 4 hourly time frame, I take the fib levels, and then I go to the lower time frames and I try to chart there and see if I will have zones where price will get rejected from, using only my patterns. So if we look at this as a bull pennant, which it is, it will give us like so. On lower time frames, I would generally just use the wicks, because using the bodies here will just put you in very tight situations. So if we take this like so, and also if price does go above these wicks, it is most likely to continue going up or down. Okay, so we take that like so, and we try to do some measurement here. So if we take this is a swing high here, random swing high, we will come to that, and we put this like so. Let's say price does break above here, we have it coming back to the 0.5 up here. So your short position should have the stop loss away from this wick here in this, but you also want it to be here. You also want it to be below the 0.5, because price can easily come to that 0.5 and get rejected there. So you want it to be like so, which is not bad actually, which is not bad. If you were to short from here to here, back even to this resistance, to the support here, it's not really bad. But if you're shorting the 0.5, you are targeting the 0.382. So this should be like so. Yeah, that would be an ideal short if you were to do that like this. And we could as well take the fib retracements for this fractal. So we're going to take this one, that's the lowest part of the pennant, so this lowest part here to this highest part here to the second low here, so this second low here. No, this one is still part of this, so we take here. Okay, so we find that this, we will easily have price come above this one here. We'll easily have price come above this one, but since this 0.5 here is on the 4 hourly, it's stronger and price will most likely retrace from it. Yeah, fib retracements that you draw on higher time frames have more effect on price in the lower time frames. Basically your confluence is TA patterns, fib retracements, and the stochastic RSI. Yes, yeah, but you know, these are the primary things that I follow. I also follow liquidity heat maps. It's not like this is like that is it. No, especially when I'm to take a huge position, I will also look at liquidity heat maps. Like I will not feel comfortable longing when the heat maps are showing that longs are in danger. You know, if I'm longing when maybe there could be like a real huge dump shown by heat maps, that's just, you know, but the confluences, they mostly match up with even liquidity heat maps. For example, what we are looking at here, a lot of people like to short support. Many people. When price is at support, it simply means that it's been dumping for a very long time. When price starts to dump like this, many traders like to short when it's already dumping. So at that time, the heat maps will be in favor of longs. You will find a lot of people or a lot of liquidity on the upside of things. So price, the market maker will like to push price to the upside, whilst all retail traders are shorting, or say most. Yeah. So but if you look at all of this, yeah, when you look at all of this, the overvalued and the undervalued, when price is in the overvalued, that's when a lot of people like to long, because yeah, it's already up, they are feeling left out, they want to go in. So yeah, basically that will be it. Yesterday, the short on Polkadot, what I was doing is that I was looking at this basically. Now, sometimes I will short support. Don't get me wrong. Sometimes I will short, because even sometimes support will break, and when the stochastic was also in the undervalued, sometimes that will happen. So if I get a lot of confluences that price is going to go to the downside, I will short it. Can a future class be, what is this, on the, yes, we are going to do a class on that. I think I really never talk about that here. I never talk about that, so we're going to make a class on that. So let's try to explain, or let's try to see what could be the most possible scenario here, and this will be the moment of truth if this is good. So first of all, we can see that price pumped to the upside here, and we have a bull pennant. The bull pennant is this one. This is clear, this is a bull pennant, and we think bull pennant will mean that price will go to the upside, like so. But you also have to look at the stochastic there on the 1 hourly. It is overvalued. Okay, cool. Now if you come to the 4 hourly, you'll have your trend line. Yes, as I was saying earlier, if BTC does not, and now on the 4 hourly I use the bodies, not the wicks. I use bodies on the 4 hourly. From 4 hourly and above, I am only using the bodies, not wicks. Okay, so we think if BTC breaks this trend line to the downside, it will continue to plummet up till until here. Now it will now have retracements as it goes to the downside. How will we know where it will retrace to? We take the highest point of the ascending wedge right here, and we take the Fibonacci retracement tool here, and we put down here. So you find it having strong support here. Even here you find it having strong support. You find it closing above here with a confirmation here. That is why it has been ranging up here. Okay, so this is what I think. This is the inverted head and shoulders here. Yes, this one. So normally if people are to long this, if people are to long this one, what will be the target for this? Target for the inverted head and shoulders, you have to take from the bottom here of the head and put here. Still, that is consolidating up here. So a real proper breakout will be the target of this bull flag, which you will take from this lowest body touching the ascending trend line here, and you put to the top part of the trend line. That will be putting us at 17.6. You guys remember 17.6, and I do have a short position at this 17.6, which I signaled close to it, but I will reopen it if price starts to go up. Now Remember that the 4 hourly here is in the undervalued, so it can go up from there. All right, now we come back to the 1 hourly, and the 1 hourly is overvalued, so we think that price will come down to here. Coming down to here will collect all the liquidity that is below here. Now with patterns, it's really, to be honest, it's really difficult to explain how patterns work, because you will have to see them for yourself. That's why you will not find maybe any indicator on patterns. They are subjective. It depends on how you see them. I could only see, maybe I would only be seeing this as an inverted head and shoulders, and you are seeing a bull flag. Another person is seeing a potential inverted Adam and Eve pattern here. So yeah, it's very subjective, and it only has to do with how you see it, you know. But that's clearly a bull flag, there is no denying. Now BTC likes to do the opposite of what people think it will do. So here you would imagine that it's just going to go up. No, what I would imagine, and since I am on the narrative that it will come down here, but I don't know exactly where, I will take my trend-based fib and put it like so. Come to the lowest point here and put it like so. So by my analysis here, and I know that if it does come lower here, it is breaking this ascending trend line. Yeah, so on a bullish narrative, I want it to bounce off of the 0.382 here. That is where I want it to bounce. I think the lowest would be the 0.5. So if I'm to open a long position here, I would be doing that like so. I would be doing that slightly above the 0.382. Yeah, but taking it to 17.6, that's a long way up. That's like a 2 to 3% pump. Now here is why I would put my fib ratio below the 0.786. Below the 0.786, that is where, you know, it's become a lost cause. If it does come until here, it's going to spiral down to here. Yeah, it's going to spiral down to 1.618, which will also be inside of the golden pocket. So there is no need to be inside of this loss. Yes, so I put my stop loss below the 0.786 down here, and the long position will be here at 17.116. Yes, 17.116. Of course it can as well just go up from here. This is all just a way to, you know how price is going to behave, but in my best guess, it will come down to this, to the 1.116 again, because I think this is overvalued, so the chances of it coming down to here are higher. If you wanted to be aggressive in the trade, you could still just enter at market here, but of course that gives you a wider stop loss. So wider stop loss means you can't really use higher leverage, and getting in with higher margin for a trade that you know could come down here, you know, it's just too risky. So I would have a limit here around the 0.382. I engulf all of the strongest Fibonacci levels here, all of these strongest Fibonacci's. This is where my stop loss will be, and if it breaks it, it's going for this. There is no need to, you know, be in this. If you want it to be here, there is no need to take all of this loss, really no need. So I would put it here, and I might open another position here, another position for a huge upside move. I might open another position here inside of the golden pocket. So I would open it like so. That will give me a 0.30%, and I would expect that it goes back 50% to the upside. So I take the regular fib from where I am taking the entry here, and I take it back up to the candle close here, the initial candle close here. I take it up here. Now I take this here because I know this is the 0.618. I take it inside of this golden pocket, and then I put very high leverage. This would be the trade I would want to take. Do you have any questions that we might answer? 7 people left. A lot of people come and leave with these types of videos. The whole purpose of it is so that you can ask questions. It's really you know, a communicative class. It's not, there is no use to, you know, just make a video and upload. I could, you know, structure all of it and make a video and upload, but that does not really help. What really helps is you being here to, you know, ask a question if you had a problem with it. That's really what will help. Now it's really a lot more confusing. So as I said, you will have to learn all of these types of stuff, but you have to come with the one that, you know, goes with you. This just goes with me. When I see it like this, I immediately see all of it. Like I could just see everything going on here in a single glance. I would just see it. I will know where the 0.382, the 0.5, 0.618 would be just from looking at it, you know. So, but I think everyone can learn it. I don't think it has anything to do with intelligence or anything. I think anyone can learn it. Yeah. Do you guys have any questions there? Basically, you're stochastic. Why do you do tier? But why do you do TA on Binance? Oh yeah, well, I just have my chart here. You know, I use TradingView a lot, so this one is like the bigger map. When I conceptualize an idea, I think, oh, maybe if price come here and does this and does this, maybe it will go here. You know, I like to, even here, I drew this a long time ago, this one. I mean, on Binance, I have even the 2020 chart. I have it somewhere around here. You know, I draw some things here, then I don't erase them. On TradingView, I erase them all of the time. Like, I just draw and cancel, draw and cancel. But the one that I think is really going to last for long, I come here. This is where I think we are going to consolidate for months. This between $9,000 to $12,000. This is where I think we are going to consolidate for a very long time. That, in my own you know, analysis, that's where I think we're going to consolidate for some time. Maybe I'm wrong, maybe I'm not, you know, and I think we could have this dip down to 3K here, and then we come back up, because I think the buying pressure here will be enormous. So yeah, that's why I draw here on Binance, and this is where I keep track of the 3-day, because I've made some videos sometimes, and I made the last video when we were here, and that was around here. I was starting to anticipate the fall somewhere around here. So yeah, it's easier when you have one chart where you just go and update stuff on it, you know. Yeah, but on TradingView is more random, so I just have my chart here, and it gives me like a map that I can follow, you know. So yeah, do you guys have any other? I still have like seven people watching the video. Let's see any other thing. Hello Vlad. Is it Vladimir? Is it Russian? What's up again? So, yeah. So if we do not have any questions and stuff, maybe we can call it. But I think you all can you explain the quick scalp with fib again? Or okay. Yeah. So basically, on lower time frames, you will easily find this happening a lot of the times. Let's take an example. Let's take a more volatile asset like Ethereum. Yeah. Okay, good. Now let's take a more volatile asset like ETH. So let's go to, yeah, ETH. ETH is better. BTC is I don't know what to do with it. Okay, let's go for ETH, for example. Okay, now I already charted ETH here, and you see it bouncing off of my zones there. Okay, now, and it's actually initiating some sort of bullish momentum here. Bullish momentum. That's good. Okay, now you also see it. Let's go to the let's say 30 minute. But you want to go for scalps. I'm not a huge scalper. I can snipe, but even my snipes would want to have, you know, higher targets. What is Ethereum doing? It's actually being bullish here. Oh, this is the ETH trade that we took the other day, yeah? So if we even did not close it, we'll still be in profits, even up till now. Yeah, we'll still be in profits. So when you see a candle like this one, yes, if you see a candle like this one, I'm gonna have to cancel this. That's why you see I draw my stuff on Binance, because it gives me like an edge, you know, like it's always there. But on ETH, on the trading view, I'll cancel all the times. So you see price go up. The intention is you want a retracement of that candle. That's what you are looking for. So a retracement to continue going up. That's what you're looking for. So you take your fib retracement, yes, and by retracement, you mean that it's going to go down first before going up. So you take your fib retracement, not the extension, not the trend based extension, the fib retracement, and you take from the close of that candle to the bottom, to the open of the candle, like so. Yes, so normally you are looking for 50% retracement. This would only really work with 50% retracement. That's the best way you can be looking for this stuff. 50% retracement of the candle, then you long it from there. Now your 50% retracement should be here, which means your long for a scalp, yeah, for a scalp would be like so, would be here. If you don't get it, it's not worth it. Your huge long would be like so, right here. That is where you want to long it, here, not here, because if you want to long here, if you want to long at the 0.618 here, which you could actually, but it really needs a very, very, very tight stop loss. If you want to long here, which if you did with this one, you would even still make profits because it bounced here. If you want to long at the 0.618, you are only longing the golden ratios, yeah? So you are longing this golden ratio here. You put your maybe we'll even do it with one of those candles there and see how it works out. So you put your yeah, your entries here. You put your entry at the 0.618 fib ratio, or say the 0.5, a bit above the 0.5, or even just at the 0.5 here. Yeah, and slightly below the 0.618. So 0.10 there, 0.10%, and then your target will be way up at the close here. Yes, so you are longing, hoping that it's still going to continue its upside move, and you know that the highest point that it could reach here will be the close of that candle. So you are longing this golden ratio. If you lose this one, you will have to long here, so you will have limit others. But I would normally like to long it from here, from the 0.5, and if I'm longing that 0.5, I am targeting the 1.618 up here. That's what I'll be targeting, this one. But for a scalp, of course, you don't really need high reward margins. You can just take it back to here, or with this one you long this golden pocket slightly below the 0.618, because if it's just at the 0.618, you might be taken out. Slightly below it, that is where you put your open position, like so. So if you did that with this one, if this candle closed here, and you put this long position, you take from the top to the bottom of the candle, because it's going to go to the downside. You take from the top, like so, to the bottom, top to the bottom of the candle, like so, and then you are taking your long position at the 0.5 or 0.618 here, slightly below the 0.618. I would like to do like 0.16. Yes, and I am targeting just this one. That will be my scalp. That will be my ideal scalp there. Now with this is just this is just nonsense. It's, what's this? You need a huge pump to do that. You need a good candle to do that. If we go to the 15 minute, maybe we'll see something there. It happens with all candles. All candles. Look, this one came to the 0.5. Next candle blows it out, and when it does this, when it goes above the 0.5 here, because this will be the 0.5, somewhere around here will be the 0.382, and if it closes above that, price is most likely to do this. If it came to the 0.618, 0.5, 0.382, price is most likely to continue going to the downside if it closed below the 0.382 in a downtrend. Now here, this price action here will come up here. We are on the 15 minute. I hope this can be done here. It's already facing resistance there. It's already facing resistance there. So here you could short it now. You could short this to here, but you will need your stop loss to be above the 0.5 here, because it has confirmed an uptrend here. If you put this here, you will need your stop loss to be above this one, slightly above that one. So normally it should retrace from there and come back to the downside. But also you look at the stochastic. Yes, the stochastic, as we always say, shows momentum. It should bounce off of the 0.6, the 0.5 there. Now it's at the 0.618. It should bounce off of the 0.5. The stochastic also is showing momentum. As it continues to go up, the stochastic is going up. Yeah, in an overvalued stochastic, you will easily see a downturn. Always look at the stochastic. Stochastic shows momentum. When the stochastic is going up and price is going up, it shows that that price upward movement has high momentum. Yeah, so shorting it now, you need this here above the 0.382, above the 0.382 with the stochastic still going up. You know that price will bounce, but it should bounce here at the 0.5. It needs strong pressure to just go right through it. It should bounce here. Who is still here? Do we still have people here? And if you're looking for a short position to take from the bottom to the top of the retracement, short position to take from the bottom to the top of the retracement. Now that it is coming down, it should close. If it closes below the golden pocket here, it's going to go back down. If you're using to take short position from the bottom to the top, if you want to take a short position from the bottom to the top, you want in the 15-minute time frame, you want your stop loss out of the 0.382. Of course, you still need good profit margin here. You need like good profit zone here. Oh wow, and you guys are not saying anything. Yeah, so on a short position, if you want to open a short position, as I said, this thing works better with higher time frames, but we're going to experiment with lower time frame here, like this experiment. We had this candle drop down here, yes, but we did not have any retracement of the 50, that we did not have any 50% retracement of the candle. So we are hoping that this was the 50% retracement of the candle. However, we do see that the stochastic here is showing momentum as price goes to the upside. If the stochastic was going to the downside as price goes to the upside, then we will know that that is a bearish divergence. Then a short will actually be needed in this situation. But as you see the stochastic going to the upside and price is going to the upside, you want your entry to be a lot more higher than just the 0.618, because price could go. But if you want to be aggressive, as this guy said, I think the name is Kovacs, if you want to be aggressive on the entry, it should be at the 0.618. However, your price, your stop loss should be above the 0.382 here. But still, that's a very tight stop loss though. That's still a very tight stop loss because it's this on the 15-minute time frame. To be extremely safe in this price movement, when the stochastic is nearing the 80 zone, because now it's at the 71.21%, to be extremely safe, you need it to be above here. If you put it here, if it goes above here, then it's really just going to continue going up. So you need it above here, above the 236. But if this stochastic was like so, like this one, if this was already up like this one, then price will most likely just retrace from here. But still, we are hoping that it's going to retrace because this is the first retest of the 0.5 Fibonacci golden ratio. Each time it comes to the first retracement to the 0.5 Fibonacci ratio, it will easily go to the downside, most likely. So even if we made an entry there, now we'll be at break even. The close of this candle will determine where price is going to go, and if it closes below this, it's going to easily go to the downside. Now on going to the downside again, it also has the fib ratios of this single candle. So to know where it could bounce off of, you'll have to take this like so. Yes, always, all candles have their own fib ratios, so it's always like so. Okay, so let's wait for the close of this candle and see how this would have played out. Let's put it, it was like so, yes. Okay, let's wait for the close of this candle, and now we are being extremely safe here. Now what is the overall trend of this price movement? the overall trend, this is actually an uptrend, so price can easily go up. That's why you need a strong tight stop loss here. This is an uptrend. Market structure, people, market structure. If you're seeing higher highs and higher lows, price can continue to go up. However, the stochastic here indicates to you if you are entering when it is overbought or undervalued. So you always have to look at this. Now I use the stochastic mostly, not the RSI. Now price just closed below the resistance here, and as I said before, when price closes below the resistance, you have a high chance of it of price marking that as a rejection. The next candle should be a confirmation. If the next candle here is a red candle, that will turn price down and it should come back down here. It's already getting very overvalued here. This is on the 15 minute. You would rarely see me do anything here. Also, when you have at the beginning of every time frame, price is mostly volatile to the opposite side, of where it's going to go later. So in a 15-minute time frame, the first 5 minutes, if it's going to be bearish overall, in the first 5 minutes, it's going to act bullish, to hunt all those stop losses, because the market maker knows that your stop loss is here. He can see it. Yeah, so there's a very high chance that it starts to go up, but to where is the question. These fibs should help keep you safe from all the volatility that you will have here before price goes to the downside. Do we have any pattern here? Even this is the 15-minute. We actually have a double bottom here. The double bottom's target, double bottom. So this, yes. Now, if we were to use only fibs, that will be it. But if we were to use patterns, so the double bottom, we have our neckline here. Is that neckline going to keep us safe from here to here? And I am so used to using the bodies, so sometimes I forget. But no, let's use the bodies. Actually, let's use the bodies. That will give us here to here and to here. So price will easily come up to the 0.382 here before we see a downside move. And if our stop loss is above the 0.236, then we have a chance of making it alive. All right, let's see. You mean to draw the fib? You drew the fib for the long position from the bottom, you drew the fib for the long position from the top to the bottom. Is it same for short position? Long position? What long position? What long position are you talking about? Just let me know. This is a short position. What long position are you talking about? Because this is from the bottom to the top. This is from the bottom to the top. The example. All right, so this one, if it's this one you're talking about, then yeah, because this is the example. I drew it from the Oh, okay. All right, so let me just re-explain that one. You drew the fib from the fib for the long position from the top to the bottom. Is it same for? Yes, it is same. Okay, so now I understand your question. So basically, he's asking that why did I draw the fib from the top to the bottom for a long position? Because long position means you are anticipating that price is going to go up, so you want to catch price at its lowest level. So the lowest oh, no, I don't have to delete that because that is our ongoing trade, remember? Okay, good. Now, so for example, here we want to long this fractal. We want to take a long position here, and that was on the 1 hourly time frame or 30-minute time frame. 30-minute time frame, yeah. So we want to take a long position here, a scalp, you would say. Okay, so we want to take a scalp, and then we want to enter around here. So basically you're asking if in a short position I would do same. In a long position I would take it from the top to the bottom, the top to the bottom of the previous candle. That should give me retracement levels, because I think price is going to go up, but I don't believe it's just going to go up in a single candle or it will just go forever up. So what I would be doing is I will seek to enter a retracement of that upward movement. So where will that retracement be? That's what I want to be looking for. Now it depends on how far up I think price is going to go. If I think it's going to go by say 1%, for example, or 2%, I'm willing to risk more to catch that 1%. But if it's only going to go by say 0.5%, then I'm willing to risk less to catch it. For example, here, let's say I want to catch only say 0.80%, like the top of the candle. That's the close of the candle, yeah? 0.86%. So I'm only willing to risk 0.16% of my entry, of my entry capital. So here, that is exactly this top here, the 0.16%. That's exactly how much I'm ready to risk to catch this again. Yes. Now, and it did not even actually go up there, but that is, let's say that is the thesis. So I will make my entry on a retracement of that upward move. That retracement is taken by drawing your fib from the top to the bottom, because you are finding areas where price can retrace to before going up, retrace, go up, retrace, go up. That's what you are looking for, or eventually go up like so. Yes. Now on a short position, you are looking for a continuation to the downside. So you will be drawing your fib from the bottom to the top. So from the bottom to the top like this, because you want to get areas where price can retrace to. Let's say price, we had a huge dump like this, yes, but you want to enter, and you know that if you enter here, it could retrace back up before going down. So it is best to enter on the retracement, not as price is going down. You want to enter on the retracement, well calculated retracement, that you know how much you are going to risk to enter the trade. So we are entering on the retracement here. We have taken the fib extension from the bottom of that dump to the top of it. So the bottom of the candle to the top, or say from the close of the candle to the open of a bearish candle. So we take from the bottom here. Let's just take an example. Okay, good. We take from the bottom of this one. This is the candle. This is the drop. Yes. So we take from the bottom to the top up here. You want to enter on a retracement, not the drop itself. This will make you miss out on a lot of trades. That's fine. That's okay. But it will also save you a lot of money. If you enter on the drop itself, well, you're gambling, and maybe you're not just using a lot of money. I see a lot of people doing that. You know, they enter in positions and they are out with like 300% gain. Well, how much were you using? You know, because if you're using a lot of money, you will be very careful. You will be very careful. In the BitGet account, I only deposited $1,000 in it. $1,000 is a lot of money. It's not small money. But actually, what makes me, you know, a bit more careful is the fact that I am trading, and each of my trades will activate other people's money, and the total amount there is like maybe over 200,000, maybe over $200,000, or maybe something like that. So yeah, I want to be very careful with it. You know, I want to be very careful. So I want to enter on a retracement. So on the downtrend, you want to catch the short position. You want to catch a retracement of price going up. You want to catch it when it's going up, because when price is going up, a lot of people want to long it instead. When price is going down, a lot of people want to short it. You want to do the exact opposite that everyone is doing. You want to long when price is going down, and you want to short when price is going up. That's what you want to do. It's the same thing when investing. You want to sell when price is going up, and you want to buy when price is going down. That's what you want to do. All right, so how is our position doing? We are in profit so far. So yeah, but this is the 15 minute. This is on the 15-minute time frame that we took this position. On the 30-minute time frame, we see that it's fairly bullish actually, and then here on the 30-minute, we see that price will actually retrace to like 50% of this candle. 50% of this candle before it takes us out of that stop loss will be around here. So this should actually be the take profit for this fractal. So you see why I don't trade any of this. Yes. Now on the 30-minute, you will also see that our 1.618 fib retracement here is our stop loss is actually above the 1.618, making it safe for us. So we have taken it from the close of this candle to the bottom right here. Now if you also look at that stochastic, when the blue line is on top, price is bullish. When the blue line is below, price is bearish. Okay, so yes, price is bearish. So you want the blue line to be on top on you know, for bullish scenario. Now but you see that the blue line is actually curving up here. I was planning to develop an indicator actually that is much more simpler than this, that mimics the stochastic RSI but shows different colors instead of two. So it's like green and red. When you see red here, it means it's becoming bullish. When you see green, when you see red, it's becoming bearish, and when you see blue or green, it's becoming bearish. I think we can do a community indicator of like that, and even add up something later for bearish and bullish divergences. I'll talk with my IT guy for about that later on. So we see that so far, if we entered this trade here, we would be in some profits, but this to me is really not anything, except you were using very high leverage here. Very high leverage on 0.13%. That's not bad. That's not bad. And if price does close here like so, you have a very good chance of it coming down here, because now it's already below the 0.618 fib. If it does close like this, but I don't think it's going to close like this, and it keeps dumping. Now it's already at the 0.5. It's going to retrace from here. Highly possible it retraces from here. Highly possible. Let's see. Oh, Amy, you're here. Good. Now, highly possible we see a retracement from here. 3, 2, 1. Okay, come on. Don't embarrass me now. Come on. Come on. And if it does retrace from here, we have, this is a 30-minute candle. I told you the beginning of every time frame would have the opposite action of what price is going to do on that time frame. So watch out, any moment from now it can actually go up. Yeah, it can actually go up. Don't neglect the bullish engulfing pattern here. It can actually go up, but we still think it's going to go down. Why? Because on the 15-minute time frame we have an overvalued stochastic. We have it here. Yes. Now also with and really I think we are going to do, oh well, it did close there. It did close there. Well, it's going to hell now, isn't it? Yeah, it did close there. When it closes here, where will it retrace to? With what we have learned today, it will want to retrace 50% of this candle. All right. Yeah, it will want to retrace 50% of this candle. Where will that 50? Now this 0.618 here will also be the 0.618 of the candle if we took this from bottom to the top, and there it is here, the 0.618. So it's going now for the 50% retracement, but the 0.618 will be a strong zone of resistance. You also see the stochastic here, and it's already acting as resistance there. You see the stochastic now, the blue is already switching to below the yellow. I'm going to make an indicator of this. It's final. I'm going to make an indicator of this that we can all use. That makes it very easy, you know, so that when you see a different color here instead of these, you will just know what's up. Yeah, and it will work super on higher time frames. We're going to make an indicator of this that we can have here for free, of course. Yeah. If the retracement didn't happen, do you continue moving the fib? And no, not necessarily, as I said before, what you have to do is identify the initial trend. Okay, you start by identifying the market structure. That's what you want to identify first. If the general market structure is pointed upwards, for example, or let's say it's pointed downwards, because we're in a bear market, we'll mostly have downwards examples here. If it is pointed downwards, then your bias should be bearish. First of all, it's not like you just keep on moving your stuff. What you want to do in said scenario is have, did I remove anything from here that's not supposed to be removed? Oh, good. Now what you want to do is draw your fib on the higher time frame first. So let's go 4 hourly here and see what is happening. You want to draw your fib on the higher time frame to know where it will eventually go. Okay. For example, let's see, let's take a very good example. We have what? Okay, good. Let's see. Now we have this one. Here. Let's take this from here to here. Now we have the lowest point here, and we have the second point here. Now let's take that one. So we know here that finally price should be coming here, or it will just continue. That price is still very bullish now because it has not broken below this one. Okay, so you have this zone here, that is the 1270 as your strongest zone of support. Now note that if it does break that one, it will form a double top here. It will give you this double top. And you always have to remember that if it does this, it will do this. If it does this, it will do this. If it will form this double top, and you will be having this as your target. You'll be having this as your target. Now, having this as your target has also validated this trend line here. It's already broken it. It's going straight to hell. if it does happen that way. Anyway, yeah, so you are not just moving these as you go along. You could on scalps, you know, on scalps you'll have to do that, but you go like to the 1 hourly and you find a bigger candle on the 1 hourly that should give you a general you know, trend where price will bounce off of and where it will retrace. Like here it is having issues because of the 0.618 here. So let's go, you go to the higher time frame next to the one you are dealing with. So we were here on the, now it's going back up there, we were on the 15-minute, yeah. So we go to like say 1 hourly, we'll have a huge candle. That huge candle is where you find your strongest support zones, strongest support and resistance. Now our strongest resistance to price action now, which is about to take our stop loss out, yeah, it went up, it went to the 0.5 and it's going back up as we said. Exactly. Now, but if it breaks that stop loss, then it's going to continue going up, so it should get deflected there. Yeah, so here now this is your strongest zone. So anything you are doing here, you have lines like so. I'm not a scalper, by the way. I don't scalp. It's just too much energy. Like, it is just too stressful for me. I like to enter a trade and go about my day, you know. I just have zones that price simply will not break, or if it breaks then I'm out, you know. It's not worth it for me to sit down all day and you know, scalp the charts. Some people do it and it works out for them. Good for them. I won't have that time. Now price is here, so it came for the 0.5 and went up exactly as we thought it would. But let's see if it will break this 0.326, but it's already above the 1.618. This is on the 1 hourly. Still there is a chance it does not take out that stop loss. Yeah, still there is a chance. Any more questions before we end the session? Oh, let's check dot out. Let's see. We'll come back to this and see what happened there. Yeah, this is still below my stop here. Now, one of the reasons I left this trade yesterday was the cross position. If I slept with it on cross, that's terrible, you know. It's better to take the 9% loss. 9% loss off. It's not super huge. You can just make back that in a minute. It's not huge. Yeah. Here. So we also see that Dodge is actually not Dodge. Dot looks like it's gonna go up. It's still holding that support, but it was beneath it here. Ascending broadening wedge. This is not so bullish actually, because this 4 hourly here, this is not so bullish. This breakdown here, this is why I exited this trade. It's not super bullish in my opinion. Okay, so we also see the ascending trend line here with dot, but yeah, it broke below it here. This we entered somewhere here and it went up to here and broke below it. Yeah, and broke below it. We thought that it's going to continue going up. Now this stop loss here is actually safe. The stop loss here is safe because if it breaks it, it's just going to spiral down to $5. Yeah, if it breaks it, it's just going to spiral down here. So it's actually logical to be longing it where it is. But it shouldn't break it. It shouldn't break it. If it breaks it, that's it. It's just going to spiral down to here. And this was my analysis. This was my 3-wave projection here, and Yeah, but if you take this from here, this candle close here to this candle close to this candle close here, and then you look at what it is forming in between here, this is an ascending broadening wedge. So ascending broadening wedge wedges will go like this. You'll have price consolidating, like, no, going up like so. You'll have price going up like so in an ascending broadening wedge like so, and this is bearish. This is bearish, and the target, ultimate target, is here. The ultimate target of this type of action is here. That is the ultimate target of this happening with Mr. Dot here. So if it does break this, you expect to catch it down here. Catching it down here, the 4 hourly is actually in the undervalued, so you will not be so safe to be betting on it plummeting here. It can, but betting that it plummets here is riskier than betting that it goes to the upside here. Okay, let's put 1 hourly, and on the 1 hourly it's also getting back to the overvalued territory. So yeah, it keeps consolidating in the ascending broadening wedge. It's not really the best. As it dropped on this candle like so, it's not the best. It's not the ideal situation to be in here, to be longing. But though longing is still just, like the absolute, because shorting it has more higher potential it has more potential to go to the upside than downside here. So shorting will be risky, because the higher time frames favor it to go to the upside. Higher time frames are better, to look at where price is going to go overall. It's always important to know where price is headed to in the longer, in the higher time frames than shorter time frames, because higher time frames will easily make it become volatile to the upside if the higher time frame was bullish. Any more questions? Draw dot. Draw. What do you mean? What do you mean draw dot? Okay, let's just do a quick recap with dot here. So this is dot on the 4 hourly. Yes, we see that even as it is consolidating down here, it is overall bearish, because it came down here, consolidated. When it consolidates to the downside after a drop, it's overall bearish. When it consolidates to the upside after a pump, it is overall bullish. And just as I'm looking at it now, I can see this head and shoulders here. So you see that if it does break that support there, it will spiral. It will spiral to down here. Now, so my bet was that it's going to go to the upside, because if it breaks that support, it's just going to go to the downside. And there is really, and I think Bitcoin still has to go to maybe 16.6, and 17.6 to 18K. Maximum would be at 18.7, which will put it at the 1.618 fib retracement. So here on the 4 hourly, you can take this like so. Okay, you can take this down here. So you are taking this candle close here, the second candle close. That's their problem, if they don't want to come here. So are we still here? Yeah, it lost me for a second there. My computer, I did not get notified on. Yeah, I did not get notified on my low battery. So All right, so we have this close here. Yes, so this is the first holding candle here. This is holding it from going to the downside. And we'd always, as I said before, if you wanted to catch the remaining part of this up move here, you'll want to take your fib from the close here to the bottom here, and that will not even catch it because, you know, it did not reach, and that's fine. You don't have to catch all of them. Now, also, don't just go and try to use this on micro caps. You'll get obliterated easily. Bitcoin, Ethereum, you know, large cap coins are the best for this, not micro caps. It takes a very little amount of money to move, say, Saito or Stratos, or, you know, it takes a very little amount of money. Your $10,000 investment in Stratos will move the price, you know. So yeah, so these micro caps are not the best for this type of analysis. You need Bitcoin. Bitcoin is the best. It takes a lot of money to move Bitcoin by 1%. So it is the best for all of this. Okay, so right here we see that dot, this is the holding candle here. Yes, this is the second holding candle here, so we expect that it will go to the upside. Now it could have just plummeted down here, but it did not. It went to the upside, and this is the third one. But then with this one, it closed below the ascending, and this is also something that I could tell you guys that you can use. If you see random coins you know, plummeting, that's a signal that Bitcoin is next. Plummets, or say huge price drops, always starts with micro caps. The reason is because you have a lot of people who have a lot of money, and they mostly invest in BTC. These people have insider info, so whenever they hear of some news before you and I, peasants, hear of it, they take action. So by taking action, they go to you know, sell their their micro cap holdings. Okay, they go to sell these micro caps, and when they do that, you find that micro caps will easily, you know, plummet out of nowhere. Maybe you hear that Stratos, you know, dropped by 30%, and you don't know why. Know that maybe some very big people are selling their micro caps, and mostly when that is happening, BTC dominance starts to increase. That is your signal that there could be a huge drop coming. Now, it's the same thing when you maybe witness a pump. You could see Stratos, if you would have noticed, whenever Stratos pumps by maybe 30%, Bitcoin will follow. In days or weeks later, Bitcoin does follow. That is because people, or say the whales who are investing in those coins, they know what you and I do not know. They know what is going to happen soon, so they take action, and so that we catch them later, we catch the same action later. So that's what I would usually find. Now with dot here, you will see that it already broke the ascending trend line that we were witnessing with Bitcoin earlier. It broke it here, had a retest here, and it came down here. Now this retest was my entry. I thought it could break to the upside. The downside potential here was actually limited, because if I was longing here, what my entry was, I think my entry was 530. Yes, my entry was here, and it did go up for some time. Where was my stop loss? I think it was at 5. I've forgotten. Anyway, so my thought process here was that if it breaks this stop loss here, then it will just go to the downside. So it's just better longing it when the 4 hourly is undervalued. Shorting it here will be like you're shorting support. Basically, that's what you're doing, because here is support, here is support, here is support. Shorting it here is shorting support. So it's better to be longing in situation. I think my stop loss was somewhat greater than this. So yeah, so that is what I was thinking there. Now I also took this. Let's put that back on. So it's like this. Yes. Okay. Now I also took this right here, and it was like so. I also took this like this. So inside of here is my is a zone where I think price is just, you know, consolidating, but it is consolidating to the upside, which is also bearish. Yeah, it's also bearish. Oh, 521. Yeah, okay, cool. Now 521. All right, cool. 521 here, so let's put it 521. I think 530. Yes, 521. Okay, good. Now that gave me some allowance, because I know that if it breaks this, it's going down. Yeah, it's going down. But even just this close that happened here, this is where I became skeptical. And to be honest, I would have just left it like that, you know. But someone, you know, messaged me in the group, was like, are you still sure on dot trade? What's your thesis for it going up? When people start to send you messages like that, it messes with your mind. Really, you need to, trading alone, there is really no big consequence. It's your money, it's your everything. I mean, you could literally do what you like, you know. But when you're doing it for people, that is the problem. Especially when people start to question, you know, your trade. It's really a big problem. It's a real big problem. So all right, so if we are to chart this on the trend-based fib, we will be taking it from here to here to here. Yes, as discussed before. So we take this from here, or if we are doing it to the upside, yes, upside. So from here to here to here. You understand it? Yes. This is one. You shouldn't get it to you if people are skeptical. Yeah, I know, but it's hard, you know. It's not as easy as, you know, you might say it. I say that to myself all the times too, but it's not as easy, to be honest. It's not as easy. So 5.5, yeah, my take profit was at 5.5. 5.5. Why? Because 5.5 is the 0.618. If it does break up from here and closes above the 0.382 with an undervalued stochastic, you have that 0.618 to wait for, you know, for the stochastic on the 4-hourly to become overvalued. It would have reached this area right here. Now I think it could actually still go even up to here. Because when BTC move, this will move faster. If BTC is to go up to like 18k 18k, we could be expecting that dot will even go right up to here. Yes, that is if BTC is to go you know, to like 18k, dot would even go up to here. That is very possible before it plummets. But anyway, I wouldn't bet on that. I would bet on the closest, you know, place where it can reach. Yeah, so yeah, so that was what I was betting on yesterday. If it does break this, it should at least stop here. If it doesn't, it's going to plummet. There is no need to be in that plummet, so I had my stop loss here. Why not use trailing stop loss instead of closing the, yeah, but the problem with I thought of using that, but I am on copy trade, and it does not allow that. It does not allow a lot of stuff, even closing in profits. You know, putting your stop loss to profits, it does not allow that. Except, yeah, if I'm to put my stop loss to profits, it will, but closing half position and setting stop loss. It won't allow, all of that. It will tell you that you are sharing your trade, and you cannot do that kind of stuff. Yeah, but because my trades are being copied, so I don't know why they haven't set it like that. It simply does not allow it to do that way. So BNX chart. I've been hearing a lot about this BNX. What is it even? BNX. Oh damn. Oh, BNX is the one that plummeted the other day. Yeah. What happened again? Yeah, it's the one that plummeted. It plummeted so badly, and these plummets, they are like they help me to know that there is an impending plummet on BTC. When you start to see this, I'm telling you, this is like info that BTC's plummet will be coming. It will be coming. I was going to be bullish when BTC closed above 17.236. It didn't. 17.236 was the 0.382 fib. If it closed above it, I would know that, well, 17.6 would have been highly probable at that point, because that would be the 0.5, but it did not. It closed slightly below it. That's a rejection in my book. When we start to see stuff like this is some kind of info that BTC's dump is also on the way, and we'll soon see it. So here, but this is solely this is at support right now, and it looks pretty dead. It looks like oh damn, oh wow. So anyway, if you are to short this, for example, this is the weekly chart, so you need strong buying pressure throughout days to push it back up here to continue to plummet. You could say, let's say if it's to pump up here, how many percent will that be? That's a 47% pump to half of it. I don't think you can do that. So I would be anticipating the 0.618 around here. 0.618 will be a 19% pump, but from here will be a 60% pump. So this is what I will anticipate here. I will anticipate a daily recovery. So daily recovery, and most of the candles here looks like they have been recovered already. This one recovered the 0.618. This has not been recovered, and I don't think it will ever come back up here. This one has not. So I could, if I'm to enter a short position, depending on Bitcoin, of course, but this is at support now. This is shorting. This here is terrible. As most of these coins continue to die, it really is a signal for something bad that is going to come. Could it be that we are going to drift off into oblivion someday? Maybe. Could it be? It's a good game coin. News that devs sold. Devs sold. What other devs was I thinking that will sell? What was that? Sometimes when I tell people about XRP, they think I'm just a hater, but Ripple has more XRP than anyone else. They made XRP and they sold out the tokens, and they have been pushing this narrative that it's going to be used for cross-border payments. For what? I think banks will want to use CBDCs instead. And also, if banks want to use CBDCs for cross-border payments, what's to make one bank be sure that the other bank will not want to govern how they use their money? For example, if we have the dollar as a CBDC, what's to make China trust, the dollar, trust that they can use the dollar without America trying to control what they can use the dollar to do with? So They need a currency that they can all agree. They can all agree that is transparent. So yeah, because if you have 2 to 3 4 5 countries, or everyone, or say every country using its own CBDC to buy stuff, let's say China is buying from, or America is buying from China, how would China trust that America won't give it USA CBDCs, you know, and want to control it behind the scenes, because CBDCs will be controlled by the government that issues it. So the only way out of this dilemma is actually using a currency that they can all trust. That currency can only be Bitcoin. If they are to go with blockchain, that will only be Bitcoin, and it will make them to want to save, to increase the Bitcoin blockchain security, because they are all using it. This could actually work that way. Yeah, because they will want a single currency that they can all trust, that is transparent, that no one person has. But my only real problem with Bitcoin sometimes, which I think about all the times, is Satoshi. He has 1 million Bitcoins. If he tries to sell it at any day, this thing will go to zero. That is clear. So yeah. Anyway, yeah, the BRICS currency. But maybe, who knows? What if they try to buy from America, or they try to buy from another country? What makes them, what will make that other country trust that they will not want to control the money? So it comes back to one currency, one universal currency that everyone, not only countries, can trust. It comes back to that one currency. And that one currency has to be totally transparent. So it's like being in a group of people where you can give something to another person. Yeah, it's like being in a group of people where you want to give something to another person, and everyone else in that group registers that you are giving that thing to that person. This one thing is not controlled by anyone else. Yeah, Gala is actually a fair launched cryptocurrency. So the token, the Gala token, yes, it was not mined already, to give it to investors. Yeah, the miners had to mine Gala, same like say Doge miners had to mine Doge, and Bitcoin miners had to mine Bitcoin. It was not there initially. Like Stratos was there initially. They actually minted the coins and then took some of them for themselves and be like, all right, this is for the team. We are going to use this. We are going to use this and maybe develop the project. It's going to fund the project development, and we are giving this to the public. The public can buy this, and this can be mined. But all of them, they were already minted. Just a part of them were left in the smart contract, so that will be mined. But Gala is different. Gala is the same like Bitcoin. Gala, you have to mine it. But the problem though with Gala is that you mine it, the miners mine the coins, and they just sell it. Yeah, because the use case now is not really there. If it were like used for transaction fees on, say, a Gala chain, that will give it strong utility, so it will easily go up. But now it's just used for what? I think community stuff. The use case is not really there. Oh, let's check Madame Ethereum. Did it go according to our plans? I dumped. Yep. So perhaps I'm a good scalper, maybe? Yeah, if we took this trade, we would have been in profits. It's going to, oh crap, it's going to hit the take profit there. Perhaps I should have called it. You know. Yeah, so yeah, it's good that we took this live and we all saw what we did here, and thank you so much for being here today and stuff. Now here is what I want you to see. If does close here, yes, what is it doing? This right here is an ascending wedge, yes, so you draw this is the target of the wedge. You would expect it to actually oh crap, it's really going to hit that target. Crap, I did not call it. Okay, so okay, good. Now, so what is the target of this ascending wedge? It is the bottom of the wedge, so it has already hit that target. But if we took this as the pole of the wedge right here, and we put from where it broke from the pole, because it has broken through that target, yes, what is going to happen? The next target will actually be here at 1280, 1268. 1268. All right, now here is something that you must note. You see that it is bouncing where? At the 0.5. Yes, you see that line, the 0.5. It is bouncing at that 0.5. If it closes below it, your next zone is the 0.382. Yes. Now maybe I would have closed this session without showing you this. One other thing you must know with Fibonacci. Yeah, one other thing you must know with Fibonacci is that if you draw this trend line like this, yes, if you have the trend line, let's do that in another chart. Let's say chain link. Okay, cool. Now if you have this like so, yes, if you have this like so, and you want to call, you won't really want to call this a bull flag, because this is really just showing you lower lows and lower highs. You see that this is a downtrend here. This is most likely to go to the downside than continue going to the upside. This right here, we did say before that Bitcoin could bounce. We'll check that also to see if it's at that zone. If it's there, we'll most likely just take a short. This like this, inverted cup and handle, yes, because if you put like this will be a cup and handle. This is an inverted chart, so that was an inverted cup and handle, and it's already breaking the handle right here. So this is the target. You put where it's breaking out, and this is your target. Now this is the target for the cup. All right, so this is the target for the cup. Now this is something you should do. This, we don't, price has not happened here. We don't know what is going to happen here, but we could know. We could know what is going to happen here. We could exactly know. How will we know? We know that this is the handle, yes? So we take the trend-based fib. This is our highest point. We take 1, 2, 3. This is telling us where price will go to if it was going to go to the downside still after reaching here, before even happening up here. Now, how do we know how price is, what is going to happen up here? Oh no. We take this one, retracement. We take from here where it is breaking this fractal and up to the target. You will find that the 0.618 is the target of the handle. So here, so chain link has to go here. It simply just has to. If it closes this 15-minute candle here, it has to go there to respect the price. I know it sounds funny, but yeah, it really just happens that way. It's kind of weird, but it happens. Yeah, we would expect that it goes here. After coming here, if we want to scalp it, yes, if we want to scalp, this is an inverted chart, by the way. Let's invert it again. Okay, so after coming here, if we want to short it, let's say we missed out, we saw price already here, but we want to short it, yes, we take now Fibonacci retracement from where it reached already, where it bounced already, and we take it back to the upside. Now your short position should be at the 0 point this. The stop loss should be above the 0.326, the 0.3236. 0.3236, that's where your stop loss should be. Okay, yeah, that is so that you are following the rest of the move down here using the stochastic. If it came down here and the stochastic is already in the undervalued, be careful, because you will be shorting support. All right, okay, we are good. Yes, we can always have these discussions each time, you know, we come back live. You can always ask a question, even in the Discord group or in Telegram. You can always ask a question. It's not, I don't have to do it only on Sundays. You can ask for your own TA if you did some TA and you just wanted me to look at it, or if you wanted me to look at a certain coin, just let me know. Yeah, we see that Chainlink, it's gonna dump actually, because yeah, it did break this. It did break the ascending wedge here on the 15-minute. Ascending wedge on the 15-minute. Where is its target? The target is at the 0.5 golden retracement here. Yeah, 0.5 here. So we actually expect it to come down to the 0.5 here. If we want to long it instead, there at the 0.5, we'll want to do that at the 0.5 with very tight stop loss here. Longing. We are longing at the 0.5. Tight stop loss now will also still be below the 0.236. Yes. Now your long position should be just slightly. I'm gonna zoom this in so that you guys know what the hell is that. Okay, so your entry should be just slightly above your target. Okay, if you put it exactly there, you may not get hit. You can put it even here to ensure that you actually get into position, because this is the target of the this one, of the handle. Yes, that's the target of the handle. This will be the target of the ascending channel, ascending wedge here. This one. This is the target here. Always put eyes on the stochastic. If the stochastic is already in the undervalued, don't be shorting, because that can easily take you out. All right. Okay, people, stay blessed, and we will see each other in our next